What is up, investors? What a crazy few weeks it's been. The markets are absolutely insane at the minute. There's a lot of fear out there and a lot of people don't know whether to buy or sell. There's an awful lot of uncertainty. Hopefully we will see an upward trend emerging soon. Anyways, you've seen the thumbnail, you've read the title. You know that today I'm going to be looking at Corsair Gaming, Nasdaq ticker CRSR. Corsair only became publicly traded in 2020, but the company was founded in 1994, so they're nearly 30 years old and could be considered a mature company. But I think they have great long-term potential growth. In this video, we're going to be looking at what the company do and their expansion through acquisitions, some technical analysis and some analyst price targets. We will look at the company's financials and their most recent earnings report. We will look at the management team, along with the one big red flag I came across in my research. And finally, we will look at the overall gaming market and see how this company is positioned in that market. I want to point out that I'm not a financial advisor and this is not financial advice. All the information in this video is freely available and I encourage everyone to do their own research if thinking about investing in this company. At the time of this recording, I do not hold a position in the company, but that might change in the coming weeks depending on the market in general. So stick with me for the next few minutes and I'll explain to you whether I think this company is worth investing in or not. Before we get into the video, if you like the content, hit that like button. It would mean the world to me. It takes a lot of time to research these companies and make these videos, so hitting that button would help me very much. It really helps the algorithm. Subscribe to the channel if you're new and hit that bell notification so you never miss one of my videos that could potentially make you money. If you're not familiar with Corsair, they are a leading global developer and manufacturer of high-end technology for gamers, content creators and PC enthusiasts. They offer a full range of gaming gear such as keyboards, mice, speakers, a range of streaming gear through Elgato, and they offer a full range of PC components such as PCU coolers, memory and storage, and a range of gaming PCs. If you have ever built your own custom PC, you've probably used a Corsair component at some point. In my opinion, from building my own PC back a few years ago, they make some of the best and most reliable hardware on the market. In recent years, Corsair have acquired other leading companies. Again, if you're familiar with online gaming, competitive gaming or content creation, you would probably have heard of Elgato, who make some of the most well-known stream gear such as the HD60 or the Stream Deck. They were acquired by Corsair back in 2018. In 2019, they acquired Origin PC and Scuf Gaming, who make a high-end range of esports controllers for PC and console, and only last month acquired Visuals by Impulse, a leading design platform for creators which will come in under the Elgato range. Corsair only became publicly traded when they had their IPO back in September 2020. When we look at this chart, we see the company has risen a lot since its IPO at $17 back in September. Corsair has risen from its low point of about 12 up to approximately 50 in November. We can see here that Corsair has consistently found a level of support around the $34 mark, which is just above the current price. Each time it hits that support level, it rises until hitting the level of resistance, which was around 44 in December, 47 in January, and finally 48 on the day of its earnings report. So the stock had been in an upward movement until its earnings, which were quite good. We'll discuss that more in a minute. However, as you can see here, Corsair is in a downward movement for the past month, dropping over 20% since its earnings report. There could be a number of reasons for this, such as buy the rumor, sell the news, meaning that the price was being driven up in anticipation of the earnings and was always going to bring around a sell-off afterwards. Its drop could also be considered to be relatively in line with the current market, which has been looking at similar drops over the same time frame. As we can see here, analysts have been very bullish on Corsair over the last few months since IPO. The average price target is $49 with a high estimate of $55 and a low of $44. Our current price is below all of these price targets with a potential upside of nearly 40%. However, as we can see here, most of these were set on the 10th of February. At that time, the market was still at all-time highs, before the drop we've had in the last few weeks. And of course, the company had just produced an earnings report that exceeded expectations. I do not think they would give the same price targets if they were given them today in the current market conditions. However, that doesn't necessarily mean that I don't consider this to be a buy. I will take this into account in my overall consideration. So here's the report from the fourth quarter of 2020. So, net revenues up 70%, gross profits up 120%, operating income 300%, the EPS of 53 cents per share, that's an increase of 200%, an increase in cash flow and cash in hand of 133 million, which is an increase from the 51 million last year. Then when we look at the full 2020 highlights, it's a similar story here, everything's up 100% or more. Just look at that operating income, 158 million, it's an increase of 568% year on year. Looks fantastic on paper. Now let's look at the balance sheet and income statement. So when we look here at the income statement, everything looks fine. Everything here makes sense. Sales are up, cost of sales and expenses are up by roughly the same percentages, so it makes sense. In fact, the margins are improved a bit. So then we look at the balance sheet. Straight away, cash is nearly 3 times what it was last year. Accounts receivable and inventories are both up 50%. Might be a little bit unusual, However, everything else looks fine on the asset side. In the liabilities, total current liabilities is up quite a bit. Accounts payable and other accrued expenses actually up quite significantly. However, the net debt is down significantly, down about 35%. Management's financial outlook, they pretty much expect 2021 to continue as 2020 was. They're expecting revenues to increase roughly 10% and adjusted operating income to be pretty much in line with 2020. Which leads us on to who exactly are the management team. So now we'll take a look at who exactly is running Corsair. This is where I encountered my red flag. So the CEO of Corsair is Andy Paul. Andy is also one of the co-founders of the company, and there is some inside ownership, with Andy holding approximately 3 million shares. However, he did sell 250,000 shares on the 26th of January at a price of 35 a share. I don't like to see management selling their shares, it's usually not a good sign. However, he did sell less than 10%. Michael Potter, who has had a very credible past record before joining Corsair, such as his role as CFO at Canadian Solar during a very successful period, while the rest of the team have all got very credible histories, including this guy, Senior Vice President of Strategy and New Ventures, Julian Lighton, who has also fulfilled a boyhood dream this year and became a pirate. Congratulations, Julian. Now for what raised a red flag for me. So between the IPO date and the end of January, there was an absolutely huge disposal of shares by a George Majoros, Anup Bagheera and Corsair LP Eagletree. So I looked into this. Eagletree Capital, of which George and Anup are managing partner direct, have been major shareholders of Corsair since August 17. Looking at the other companies that they're invested in, though, seems reasonable enough that they'd be selling now. A quick look at their website didn't raise any red flags. Other companies that they've acquired and then sold are still going strong, such as eDreams, whose share price now exceeds the price that Eagletree got out at. It could just be that Eagletree sold their positions in eDreams and Corsair as a strategic decision to raise funds for other investment in other ventures such as Sparks and Frost Travel Group, which they have invested into in the past few months. The other red flag for me is something I also came across during this. Eagletree Capital are still the major shareholders and owners of Corsair. However, the lock-up agreement is due to expire on March 21st, at which point the supply of available shares will increase substantially. So this is something to really take into consideration before investing. The overall gaming market has exploded recently. Now, a lot of people would like to tell you this is due to the pandemic, and once it is over, the gaming industry is going to reduce in size. That simply is not true. The overall gaming market has been growing for years, and is predicted to grow somewhere between 5 to 12% year on year over the next 4 years at least. The gaming industry has been growing steady for at least the last decade. As we can see here, the pandemic did nothing to change that trend. At the moment, the gaming industry is considered to be bigger than both the music industry and Hollywood. This article here was written back in 2019. Now, in the most recent years, competitive gaming and esports have really taken off, and this is where Corsair differentiates themselves from others in the industry. Corsair offers high-end products geared towards the competitive gamers, products that are designed to offer the competitive advantage. Through Elgato, they offer the range of best-in-class products for content creators and streamers. Through Scuff Gaming, they offer the best-in-class of customizable pro controllers. Overall, it's a growing market and will continue to be, and Corsair are positioning themselves to have best-in-class products across every section of the industry. So, in conclusion, I hope you've enjoyed the video. Please drop a like if you did. Since you've watched all this, you deserve to earn some money, so this is what I think of the company. I like Corsair. I like the products. I genuinely believe that when it comes to RAM, there isn't anyone better than them. When it comes to game streaming and recording, I really don't think there's anything better than Elgato. And this is reflected by the prices. Both Elgato and Corsair components and parts are not cheap, and there are far cheaper competitors out there. But competitive gamers will pay a premium to have the best gear, and Corsair know that. That's where they've positioned themselves in the market. So the question is this company worth investing in? In short, yes. I think this company offers impressive growth in the medium to long term. However, at the moment, the market is extremely uncertain. Corsair has dropped a lot since its heights around the time of its earnings report. That report was good. If anything, the share price should have gone up, but instead it went down and it's been coming down since. That has more to do with the market than the company specifically. Everywhere is down, and Corsair is no worse hit than a lot of other companies. I think maybe hold off on buying this until the market drop has at least slowed down a bit, because it's very hard to tell at the moment where the bottom is. At the moment, I would not buy into this company, although I do like them and they are solid. With the lockup expiring later on in the month and the current downward trend, it would be very easy for this price to continue downwards for the next few weeks. At the very least, keep an eye on the market before making any buying decisions. This could drop as low as the low 20s before the lockup period ends. As always, this is just my opinion. And if anyone's thinking of buying into this company, I encourage you to do your own research and not just take the opinion of a guy on YouTube who makes a video. As I said before, I am not a financial advisor and this is not financial advice. Please guys, always only invest money that you can afford to lose, because the value of stocks can go down as well as up, and with the market recently, a lot are going down. So guys, thanks for watching the video. I hope you enjoyed it. What are your thoughts on the future of this industry? What are your thoughts on this company in particular? Leave a comment down below. I'm interested to hear what you think. If you enjoyed the video, please drop a like. It would help me out so much. Subscribe to the channel and let's make some money.